Welcome to another episode of our Technical Insight segments. I'm talking with Heath Bedford today in regards to the relationship that we see or that we study between house prices and unit prices. We look at this indicator in all of our regional and capital city reports. Hi Heath.
Hi Sharon.
Why is this an important indicator to look at?
Yeah, look, it's a good metric that we've been calculating for a number of years now across all the markets. Basically, it's a way of identifying potential buying opportunities, essentially. So, for example, if we were to see unit prices tracking well below its long-term trend, then maybe that's identifying an opportunity within the unit market within that suburb. Or conversely, if units are tracking above the long-term trend, maybe there's an opportunity within the housing market within that sub-market or suburb.
So do we see, in all of our analysis, do we see a correlation between the prices either way?
Absolutely, yeah.
And is it, I suppose, set in stone that the unit prices follow house prices, or not that simplistic?
It's unfortunately not that simplistic, as much as we would like it to be. There definitely is a correlation, and a number of studies have indicated that across all the capital cities, that there is a direct correlation. Lag times can be anywhere from 1 month, 3 months, up to 12 months, but there are a number of additional influences or factors that investors need to be wary of. And
what are some of those influences?
most importantly, supply. The amount of supply of units coming into a market, the demographics of the market, there's an ageing population, a younger demographic moving in. All of those are very important considerations. Also some emotive drivers as well. So particularly in the larger cities like Melbourne and Sydney, where buyers that are being priced out of the housing market, in particular suburbs, will look to compromise or adjust the asset rather than location. Yeah. Another point would be to look at the type of housing stock coming into the market as well. So if we do see the gap widening between housing prices and unit prices, it may not just identify an opportunity within the unit market. It may be suggesting that there's a number of lower value 1 and 2 bedroom apartments coming into the market, which is thereby pulling the median price down, and that may become the new norm. So where in a suburb unit prices traditionally have been, say, 75-80% of the median house price, they may be tracking at 60-65%, and it's due to a number of 1-bedroom apartments entering that market, particularly in higher density areas. We're finding that.
Yeah. So there's a lot of scope to cover in this topic.
There is.
In our reports, we cover it on a macro level, but of course, when we're in a region or a city that we're buying, we cover it on that micro level.
Absolutely.
Yeah. So we have an article on this topic on our website as well. So if you'd like to read more in depth on this topic, click on over to performancedata.com.